Welcome back to Explain the Charts. Today we're going to analyze the AUDUSD pair, looking at the latest news and chart data to see what the market is telling us. We'll be using technical analysis to identify potential trends, reversals, and key price levels that could influence the pair's future direction. As we zoom in on the daily chart, we see a clear bullish trend developing over the past few months. The pair has steadily climbed from its recent low in July, breaking through several resistance levels along the way. This upward momentum suggests that the Australian dollar is strengthening against the US dollar. This trend coincides with recent economic data from Australia, which shows strong growth in consumer confidence and a resilient job market. On the 1-hour chart, we can see that the AUDUSD has been consolidating over the past 24 hours. The pair is trading within a tight range, suggesting that there's a lack of clear direction for the time being. This consolidation period is likely due to investors waiting for more economic data and events to confirm the market's current trend. Zooming in even further, to the 15-minute chart, we can see a more dynamic movement. The pair experienced a brief surge in price earlier today, but it quickly reversed and is now trading lower. This volatility indicates that short-term traders are actively trying to capitalize on fluctuations in the market. Taking a look at the recent news, we can see that the Australian dollar has been boosted by a combination of factors. The recent stimulus efforts by the Chinese government, aimed at reviving their struggling property sector, have created a positive sentiment in the market. This is because China is a major trading partner for Australia. Additionally, the Reserve Bank of Australia, RBA, maintained interest rates at 4.35% this week. This suggests that the RBA is not ready to cut rates yet, which could support the Australian dollar. On the flip side, the US dollar has been under pressure due to concerns about the US economy's growth prospects. The latest data shows that inflation in the US is still stubbornly high, leading to expectations that the Federal Reserve might need to keep interest rates elevated for longer than initially anticipated. This uncertainty has weakened the US dollar. Looking at the charts, we can see that the AUDUSD pair is approaching a critical resistance level around 0.6900. If the pair breaks through this level, it could signal further bullish momentum and a potential move towards the 0.7000 level. However, if the pair fails to break through this resistance and retraces back down, it could indicate that the bulls are losing steam and the market might be headed for a correction. On the short term, the 1-hour chart suggests that the AUDUSD might be headed for a minor retracement. The pair is currently consolidating near the upper end of its recent trading range. This suggests that a pullback towards the 0.6850 level is possible in the coming hours. It's important to note that this retracement could be temporary, and the pair could resume its upward trend once it finds support. The 15-minute chart shows that the AUDUSD is highly volatile, with frequent shifts in direction. However, we can see that the pair has been finding support around the 0.6800 level. If the pair retraces back down, it's important to keep an eye on this support level, as a break below it could lead to further downward pressure on the pair. Conversely, if the pair manages to hold above 0.6800, it could be a sign of renewed buying interest. To sum up, the AUDUSD is currently in a bullish trend, but it is facing some resistance around 0.6900. The short-term outlook is a bit more uncertain, as the pair is consolidating and showing some volatility. However, the recent news and economic data suggest that the Australian dollar is well-positioned for further gains in the long term. The key price levels to watch are 0.6900 resistance, 0.6850 potential retracement, and 0.6800 support. A break above 0.6900 could lead to further bullish momentum, while a failure to break through this level could signal a correction. A retracement towards 0.6850 is possible in the coming hours, but it might be temporary. If the pair retraces below 0.6800, it could indicate a shift in the market sentiment towards bearish. Keep an eye on the pair's movements around these levels, as they could offer valuable insights into the market's direction.